what we're here to talk about today actually has nothing to do with stocks. We're going to be talking about trading Forex using the Ichimoku Cloud. Oh, great, Mary, you're a Forex trader. That works perfectly. So we're going to be talking about trading Forex using the Ichimoku Cloud. And what this trading plan is the result of is kind of a combination of all of the lessons and practical applications that we've used the Ichimoku Cloud for, and then have now applied them to the Forex market after doing some historical testing and seeing exactly what type of trade setups work the best. So what you guys are about to see is the end result of all of that work, and it's taken us quite a long time to get to this point. So I'm really excited to present this to you guys. Just very, very quickly, who here has never traded a currency pair in their entire life? Has never once in their life traded Forex? So wow, not very many of you. So Forex, I think, is a fantastic market to trade. We're going to get during all of it, during your travels, right? Yeah, when you're switching your money back and forth at the airport. We've all done that. But so let's jump right into this here, and we'll talk about why I like the Forex market and why indicators like the Ichimoku Cloud work particularly well in the Forex market. So Reed did a great job of introducing me there, so I'm not going to spend too much time on this. My name is James Ramelli. I actually trade futures, Forex, stocks, commodities, and equity options. Like you said, I'm regularly on CNBC, Bloomberg, Fox Business, and BNN Canada. I write for Futures Magazine, Active Trader, Resource Investor, and CME Open Markets. I work together with Andrew Keene, our head trader and founder, who now lives and trades from San Diego, California. The upside perks of being successful traders, you can pretty much live and trade wherever you want. So he got out of Chicago and went to the warm weather. I'm stuck here. That's okay, though. And Andrew is also a regular guest on CNBC, Bloomberg, Fox, BNN Canada, and he has over 10 years of floor trading experience at the CBOE. So we start all of our webinars out the exact same way, and all of our trading plans are written with this one concept in mind, and it's that 90% of all traders lose money. Why is that, and how can we help fix that? And that's a real statistic. You can look that up. If you're a retail trader out there, 9 out of 10 times you are going to be a net losing trader. And it's because people aren't necessarily hardwired to think about things in the ways that would make them a successful trader. So your brain will tell you to buy stocks, currency pairs, futures, whatever it is that you trade as they go lower, and sell them as they go higher. And that's because you don't want to be wrong, right? Humans are stubborn animals. We don't want to admit when we're wrong, and it's very easy to look, and especially when we're looking at the wealth of technical indicators that even the most basic retail platforms have now, very easy to look for a reason to continue buying into weakness or selling into strength when there really isn't one there, okay? So 1 out of 10 traders is able to make money and overcome that hurdle, you know, be it in human nature or in the way that they're thinking about their trading plan. It's not easy, okay? And that's why only 1 out of 10 traders who try to actively trade as a retail trader will make money. So our goal is to teach you guys strategies and setups, and particularly concrete trading plans that help remove the emotion from trading. I think that one of the largest drags on any trader's account is the fact that they trade emotionally, meaning, you know, I make snap decisions about my stop losses and profit targets when I really should be placing those things at the onset of the trade and not moving them, okay? It's very, very easy to let your emotions change your plan. So all of our trading plans are written with that in mind, meaning you are never going to have a question mark situation where there's going to be something that happens and you won't know what to do. Okay, that's never going to happen if you follow our trading plans the way that we write them. And we write them because we want our trading to be that way too. Just like everybody else, there's moments where I've made mistakes when trading because I got upset or greedy or fearful and didn't follow the trading plan. Okay, so keep that in mind as we go through this. And all of our members, we have a 78% renewal percentage month over month. Okay, so that just goes to show you that we're not teaching trading plans that lose money. okay? It's not something that is, going to be an indicator or trading plan that is 50-50, right? The plans that we use are proven to be profitable. We've been trading them for a long time. We've done all the testing ourselves, okay? So enough of all of that, and let's jump right into the trading plan here. So the first part of the trading plan requires an understanding of our favorite technical indicator, and it's called the Ichimoku Cloud. Okay, so the Ichimoku Cloud is a technical analysis method that uses past, present, and future to help traders identify and glance if security is in bullish or bearish territory. So Alan says, do you teach very basic? So that's a really good question, and I should have said this at the very beginning, and my apologies for not. If you have any questions about anything that we're talking about as we go through this, please, please, please interrupt me, ask the question, and I will stop and answer it, because I guarantee you that with the number of people that are in here, if one person has a question, there's at least a dozen other people who just have the same question and just won't ask because they're afraid, or it's just not in their nature to do so. And I want to make sure that we are moving forward with a clear understanding of the concepts that we're talking about. So to answer your question, Alan, the Ichimoku Cloud is something that we really like because of the fact that it's something that any trader can use. So it's something that even the most beginner level trader can use to help improve their probability of being successful, and it's something that even the most advanced traders can use to help confirm the setups that they might already like, okay? So what the Ichimoku Cloud actually translate to, the Ichimoku Kinko Cloud, that's the full Japanese term for it. It actually translates to one-glance equilibrium chart. So Alan, if you would consider yourself a beginner-level trader, well, then you can use an indicator like this, because when we say one-glance equilibrium chart, we really mean one glance. At a single glance, you can take a look at any security out there that trades and determine whether or not it's in bullish or bearish territory very easily. And that's the beauty of the Ichimoku Cloud, is that I can use it that simply, and I can get as complicated with it as I want. So we're going to go through, and I'm going to do a very short kind of run-through of the 6 key components of the Ichimoku Cloud and what each of them means individually, and then what they mean all together. Okay, because the cloud has these 6 key components, each of which we'll take a look at, but when they're combined, that's what actually constructs the study known as the Ichimoku Cloud. Okay, so we're going to talk about what is the Ichimoku Cloud, the different components of the cloud, how I can use the cloud as levels of support and resistance, and how I can use the cloud to help determine trend. That third point there, using the cloud as levels of support and resistance, is going to be the most important application of the Ichimoku Cloud. And the reason that we like it so much is because it provides fantastic levels of support and resistance, and fantastic levels for me to use to play breakouts of support and resistance. It also helps me identify trend, and I am not a counter trend trader. I am not someone who's trying to call bottoms or call tops in stocks, futures, or currency pairs, because I think that's very, very difficult to do. If that is your game plan, more power to you. I wish you all the luck in the world. I just really believe that probability-wise, it's very difficult to do that successfully in the long run. I think it's a losing proposition in the long run. At least it is for me. So I want to follow trend, and the Ichimoku Cloud gives me the best look at that trend. So let's take a look at what the cloud actually looks like here. Here we have the Aussie dollar USD on a daily bar, meaning we're looking at daily candles here. And this might look like a big mess here. A lot of different lines, a lot of different colors, but I'm going to tell you one thing, and if this is the only thing that you take away from this presentation, please make it this. When looking at the Ichimoku Cloud, and when I'm looking at this shaded area here, so at this, the shaded area all through here, anything that is trading below this shaded area is trading in bear territory. Anything that is trading above it is trading in bullish territory. Okay? So with that in mind, I can play breakouts of this shaded area to the upside or downside in my trading plan. Okay? And that is basically behind this trading plan that I am about to teach you guys, is playing breakouts of the Ichimoku Cloud. Now, obviously, it's not as all simple as just looking for the any security to break through the cloud to the upside or downside. What I'm going to teach you guys is how those cloud breaks can be used with other levels of confirmation to guide you into incredibly high probability trade setups, okay, and particularly in the Forex market. So let's take a look at some of the individual components of the Ichimoku Cloud. Okay. So the first component of the cloud here is the red line that you see right here as it goes through trending lower below the cloud here, and it's called the Tenkan-san line. And it's a short-term trend line. It's similar to a 10-period moving average, and what it shows me is the highest high and lowest low divided by 2 over the last 9 periods plotted under the current bar. This is the short-term trend line, and I can use this to place a trailing stop. I can use this also as an early warning of when trend might start to reverse. Okay, this is going to be my fastest trend line that I have as part of the Ichimoku Cloud. What's great about the Ichimoku Cloud is that any one of the 6 components of the cloud could provide a signal for a trade, but they all also act as confirmation of each other, meaning I can use all of the different components to confirm a trade setup. And any trade setup that I'm taking off of just one indicator, I have to understand that it's not going to be that strong of a signal. It might be a strong signal on that one indicator, but without adding levels of confirmation, then it's not going to be the highest probability setup, right? And that's what we really want to do with these trading plans. Because the reason that only 1 in 10 traders make money is because they take low probability trades and they don't know how to size their risk versus reward. All right, so the trading plan that I'm going to show you goes through that A to Z, okay? The second component of the cloud is the Kijun-san line, and it's a longer-term trend line. It's kind of similar to a 30-day moving average. So what we're looking at is the highest high and lowest low divided by 2 over the past 26 periods plotted in today's current bar. This is the second level of support or resistance on the Ichimoku Cloud. Someone says, are there any currency pairs that Ichimoku Cloud works best with? Can it be used to trade Bitcoin? Yes, absolutely. It can absolutely be used to trade Bitcoin, be used to trade anything. The charts that I'm showing you right now were made on a platform called tradingview.com, and it's completely free. They do have some kind of premium service. We have no relationship with them, but they offer Bitcoin charts using the Ichimoku Cloud as well. You can put the cloud on a Bitcoin chart if you wanted to. And that's something that you all should keep in mind as we go through this, is that we're looking at examples here that are specific to the Forex market, right? But the concepts that we're going to talk about are applicable to pretty much any market out there. I can pretty much trade any product I want using these concepts on the Ichimoku Cloud. It's all about knowing the correct time frames to use them on. So I'm going to show you the time frame in mind that any product under the sun can be traded successfully using the Ichimoku Cloud. So the Kijun-san line, like I said, is my second level of support or resistance. It's a longer period moving average. Some Ichimoku Cloud practitioners like to trade the crosses of these moving averages, but I believe that that's not really the best way to use the cloud. I believe that the best way to use the cloud is to use it just with these up and downside breaks of the shaded area. The other levels and components just act as confirmation. Okay, so this is the second component of the Ichimoku Cloud. The third component of the cloud is the Senkuspan A line, and this is the future short-term trend line, and this is what makes the Ichimoku Cloud unique. And it's these next two components. The Senkuspan A line is a moving average of the Tenkan-san and Kijun-san line plotted 26 bars in the future. Okay, so when I look at this close here of this bar, the most current daily bar right here, the Senkuspan A line directly above it was actually plotted there 26 periods ago, 26 days ago. All right, and the calculation for the Senkuspan A line for today will be plotted 26 periods in the future. So that's what gives us this area, shaded area off to the right here, which is known as the future cloud. And the future cloud is something that projects forward, and it gives us a general idea of potential future short-term trend. So if the cloud is sloping lower, we're in a bearish trend. If we're below the cloud, we're in bearish territory. So when we're in bearish territory and the cloud is sloping lower and the future cloud is also sloping lower, that means that we would expect more continuation to the downside, okay? Why 26 periods? That's a great question. So the Ichimoku Cloud was actually developed a very, very long time ago by Japanese rice traders. and it just had to do with the amount of trading days that were in the month that these rights traders were working with. They were working on a 26-day month, right? Whereas here we work more with a 30-day month, right? We tend to think more of 1 month of time as 30 days. There it's more 26 days, okay? So a lot of practitioners have thought, hey, that doesn't really make a whole lot of sense for trading in U.S. markets, so what if we kind of change things around to make this a little bit more in line with the way the U.S. markets trade with a 30-day month? And they did that, they back-tested it, and the end result of all of that testing and hard work was that it really didn't improve it at all, right? It didn't improve it much at all. So basically, everyone that uses the Ichimoku Cloud should be using the default settings. I really don't think there's any value in trying to change it at all. Okay. So that forms one of the bounds of the shaded area here. The second bound is the Senkou-span B line. If you line those two things up, you'll see that oftentimes they line up relatively well with each other. And what the Senkou-span B line shows me is the highest high and lowest low divided by 2 over the past 52 bars plotted 26 bars in the future. Okay, so that gives me my other bound of the Ichimoku Cloud. These lines, the Senkou-span A and Senkou-span B lines, are where I'm going to be looking for my breakouts, okay? So this break of the cloud to the downside all the way back here, this was a short signal, right? And if I use the Ichimoku Cloud and place my stop above the cloud, it would have had me in this short all the way through this move lower, and I'd still be in it. It never traded back above the cloud, okay? We're not going to be using the daily bar to take our signals, though. We're going to get into that and exactly what the quote-unquote signal is going to be for an entry for a position here using the currency market, okay? So once I have the Senkou-span A and B lines plotted, then I get the Kumo, the cloud, the shaded area in between the Senkou-span A and Senkou-span B line. This is what I'm looking for breakouts with. I'm looking for moves through the shaded area and closes of bars above or below this shaded area. Okay? The thicker the shaded area is, the harder it is to break the trend, the stronger the signal is. When the shaded area is very thin, it is very easy to break trend, and I could almost make a case that there really is no trend, and the trend hasn't really fully developed yet. Okay, so the thinner parts of the cloud can tell me that it's going to be a period of choppiness or consolidation. I want to see breaks of a thicker part of the cloud. The thicker part of the cloud, the better. Okay? And finally, the last piece of the Ichimoku Cloud, the last component of the cloud, is the Chinku-span line. So how does today's price compare with the price last month? And what it is, it's a lagging indicator. So like I said, this is one of the only studies that looks at the past via the lagging indicator, the present via the Tenkan-san and Kijun-san line, and the future via the Senkou-span A, Senkou-span B, and Kumo. The Chinku-span line is my last piece of confirmation. So if I'm looking at a downside break of the cloud, and I go back and I see that the 26-period moving average, the 26 period lagging indicator is still above the cloud, well then I know it's not as strong of a bearish setup. My best setups are going to be when price is breaking the cloud to the downside, when the Tenkan-san and Kijun-san lines are also below the cloud, when the cloud is sloping lower, and when the Chinku-span line is below the cloud as well, okay? That's what we call our 6-for-6 all-in setup, meaning that there's not a single component of the Ichimoku Cloud that is disagreeing with that signal, all right? So even with those, multiple levels of confirmation inside the cloud study itself, I still want to have a second level of tests or checks to make sure I'm in the highest probability setup. So how can I do that? Can I say that last part again for my notes, please? So the strongest setups of the Ichimoku Cloud are going to be when price is breaking the cloud and all other components agree with that price break. So if price is breaking the cloud to the upside and the Tenkan-san, Kijun-san line are both above the cloud slopes higher, and the lagging indicator is also above the cloud, that's my 6 for 6 all-in strongest signal. Likewise, if we break the cloud to the downside, I want to see the Kijun-san, Tenkan-san below the cloud. I want to see the future cloud sloping lower, and I want to see the 26-period lagging indicator below the cloud as well. Okay? So, like I said, we can pretty much trade any market we want to using the Ichimoku Cloud. All right? It's pretty ubiquitous. I can trade anything I want with it, and I do trade every single market that I trade with the cloud. I trade stock on the cloud, I trade equity options on the cloud, I trade currencies on the cloud. All of those products work well with the cloud, but Forex works just a little bit better than the rest of them do. And why is that? Why is it the Forex market is one of the best markets to trade with the cloud? Yes, and it works for futures, and it works with currency futures as well. You know, futures are a little interesting because, you know, I have many different complexes within the futures market that all trade very differently from each other, right? So futures is a very broad term that covers index futures, single stock futures, commodities, currencies, the weather, electricity, right? Pretty much anything out there that is commodified and traded has some type of futures contract or futures derivative that I can trade with it. And every single one of those markets has its own quirks and minutia that I need to understand. But for the Forex market, there's a couple of key points that helps me. Looking at the chart, would you buy, sell, or stay out on your last slide? Well, we're going to get into that, KG. I'm going to show you exactly how I'm using this information to place trades. So why do I want to use the Ichimoku Cloud to trade the Forex market? Well, currency pairs, and you know, this is a little less true over the past couple months than it has been in the history of time, but currency pairs generally are a lot less volatile than equities, equity options, or futures that are not currency futures, right? So they don't gap quite as often, okay? And gaps are something that can be very dangerous when I am trading because it means that my stops aren't quite as secure, all right? But what's better about the currency market is that it's always trading, right? It never closes. So unlike equities where if I want to take a long swing trade, I can buy today, put in a stop loss, and then I kind of just have to hope that if the market sells off tomorrow, that the stock opens somewhere near my stop loss to get out of at a small loss. But I don't know. I'm still exposed to that gap. Forex, since it trades all night, those situations where I have a black swan event that, you know, takes out my stop by, you know, 100 ticks or something like that, you know, and I don't get my fill, that doesn't happen nearly as often as it can with stocks because the stock market closes, right? When we're asleep, the stock market's not trading. Forex is always trading, okay? And brokers also offer a lot of leverage. So that means that if I'm a trader that doesn't have a lot of capital, I can use the FX market to take larger positions than I would be able to take when trading equities or excuse me, or futures, okay? That leverage is really, really great. And, you know, I think 50-to-1 is pretty standard at most brokers, and some smaller shop firms might even offer more, okay? And also, currencies are very liquid and very scalable, okay? And that's the absolute best reason to want to trade currencies is that they're liquid and scalable. Currency market is the biggest market in the world, which means that I can be a trader in this market playing with $100, or I can be a trader in this market playing with $100 million, right? I can scale this to any account size, meaning that a trader of any skill level can play in this market, okay? These things sometimes make the Forex market intimidating for some people, but it's one of the best markets for traders of any skill level to trade. Leverage and the fact that it trades all night sometimes scares traders because it makes them think that they're exposed to more risk. But if I'm responsible about my stops and I'm using a concrete trading plan, that leverage is going to be my friend. And the fact that it trades all night is also, you know, something that I like about it. Okay? So generally, Forex markets trend very well. And the Ichimoku Cloud is something that works best in trending products. I say that all the time. It works best for trending products, meaning if I have a stock that, trades very, very sideways range with a slow grind to the upside, choppiness is not a friend of the Ichimoku Cloud. Currencies don't tend to trade that way. So the cloud works best in trending markets, all right? And since Forex is a trending market, I know that the cloud is going to work very well. I can also use the cloud for swing trades or day trades using the Forex market, and I can also use it to help pick better stop loss levels, okay? So all of those things make the Forex market very attractive to someone who wants to use the Ichimoku Cloud to trade it. So Forex tends to trade best on the 4-hour bar, and if you trade other products, this trading plan can be applied to any other product, but it needs to have the same its own time frame that it works best with. Some stocks work best on a 5-minute bar for signals. Some stocks work best on a 15. Some products work best on a daily, okay? But I want multiple levels of confirmation using the cloud. So when I'm doing my analysis, I'm going to look at the weekly chart with the Ichimoku Cloud. I'm going to look at the daily chart with the Ichimoku Cloud. And my signals are going to come off of the 4-hour bar using the Ichimoku Cloud. Okay? So let's look at the example here. So here's the 4-hour bar in the Aussie dollar USD, right? And this is from last week. This is a trade from last week, okay? And one of the first things that someone's going to say is, hey, what about this one right here? Wouldn't this have gone for a stop? Well, as per the trading plan, since it broke to the downside through a part of the cloud here that was barely a couple ticks wide, that would not be a signal, okay? So disregard that one. That is not a signal. So what I can do here is see that this downside break is going to be my signal to get into this trade, okay? So I then need to look for confirmation, all right? I have the signal here, the downside break of the cloud. Both lines are below the cloud here. I want to look for confirmation. Here we have the daily bar, right? And I see that I haven't been above the cloud since July of 2014. Okay, I have not been above the cloud since July of 2014. So that means that any signal to the long side on the 4-hour bar did not have daily confirmation over the past year. Okay? It did not have any daily confirmation over the past year. The weekly bar. The weekly bar has been below the cloud since April of 2013. So my second level of confirmation via the weekly has only been in favor of shorts since 2013, meaning that I'm only looking for shorts on the 4-hour bar in the AUD, okay? Confirmation. When swing trading, I want all of these charts to line up. If they don't, then it is not the highest probability trade setup.
Hey James, are you there? We're not getting any sound right now. All right, ladies and gentlemen, hold tight just for 1 second. We seem to have some audio issues right now. James, if you can hear me, can you try to dial back in? Or okay, hold on 1 second. 1 second here. There we go.
All good?
Yeah, I'm not sure why that muted you, but yeah, you are good to go.
Okay, thank you. So the 5-part trading plan, how were you guys able to hear me through the first? I'm not sure when that went out because I didn't do that. So I'm just going to go back this one slide and start back with the signal here. Okay, so the weekly bar has not been above the cloud since April of 2013. So if I'm looking at a signal on the 4-hour bar and I want confirmation on the daily and weekly, I know that there has been no long signal confirmations since April of 2013 on both levels, meaning it's only been a short on the 4-hour bar since then, over the past 2 years, okay? Confirmation. For a swing trade, I need to have all of these charts line up and give me the confirmation on every level to take those signals off of the 4-hour bar, okay? So the trading plan works like this. I get my close below the cloud on the 4-hour bar. I short the close of that bar, 78,610, with a stop above the cloud at 78,660, okay? The trading plan works like this. I take my setups and signals off of the 4-hour bar. I look for my entry signals on this time frame. This is the best time frame to take signals in currency pairs. Then I move it out to the daily bar. This is my first level of confirmation against the signals I take off the 4-hour bar. If I'm looking at a short signal on the 4-hour bar, I need the daily bar to also confirm bearish territory on the Ichimoku Cloud. Then my final level of confirmation comes off of the weekly bar. It is the highest probability setups that will have confirmation on all 3 time frames. Okay? Now, if I take a look at a pair that is breaking the cloud to the downside, it's bearish on the daily, but it's bullish on the weekly, I can still take the trade, but I have to understand that it's not going to be as strong of a setup or have as high of a percentage of winning as a trade that has all 3. So let me ask you this. Would you rather have 50 trades a month that had a 50% success, or would you rather have 5 a month that had a 75% chance of success? Right? I think the answer from all of you would be I would rather have less trades but have them be a much stronger setup, a higher probability of success in those trades. Okay? So finally, the fourth step here. My risk versus reward setup. I can measure my risk in one of 2 ways, as a percentage of my book or as a total dollar amount. Either way, I need to understand that I generally don't want to be allocating more than 5%, 5 to 10% of my book in any one trade. For trades like this, it's probably going to be closer to that 5% level. I also must keep my stop losses in mind when I enter the trade. By entering my stop loss and profit targets at the onset of the trade, I am removing emotion from the setup, okay? I'm removing emotions from the setup, meaning I put in a hard stop and I put in profit targets as well, all as good till canceled orders. I can then walk away and forget about it. Tell me if I made money. Tell me if I got stopped out, right? But I know that when I have the 3 levels of confirmation, I have a very strong signal, and more often than not, I'm going to hit targets rather than get stopped out, okay? So by putting those orders on the beginning of the trade, I lock in those levels and I remove the emotion part of the trading plan, meaning I can't say, hey, it's pretty close to my stop. I'm going to move my stop 5 ticks higher. It's getting close. I got to move another 5 ticks higher, right? I'm not going to do that. Hard orders remove emotion. Finally, setting profit targets. So this is just as important as my stop loss. So I set my orders when I place the trades. And my profit targets are going to be 20%, 50%, and 75% and 100% of my stop loss. By using my stop loss to calculate my profit targets, I am ensuring that I'm getting a good risk versus reward setup. So for an example on that last slide, I shorted 78,160 with a stop above the cloud at 78,600. All right. I then take the distance of that stop and use that to calculate my targets. So 50% of the stop is actually, I'm sorry, this is a bit of a typo. It should be 50, 100, 150, and 200 on this line up here. I apologize. Let's just remove that because that's confusing. So 50% of my stop, 78,585. 100% of my stop, 78,560. 150% of my stop, 78,535. And 200% of my stop, 78,510. Okay? I don't like to use fib levels because that doesn't necessarily mean that I'm going to be getting a good risk versus reward setup. Okay? I want to use my stop to calculate those levels so I know that I'm, getting enough compensation on my risk, okay? And if we take a look here This example is a little bit older, but it hit that first target in relatively short order, right? And then it hit that second target right after. All right. Once that second target is hit, I can move my stop to break even and ensure that I'm going to be profitable on the trade. All right. I won't be able to lose money anymore. All right. By doing that, I'm taking risk off the table and locking in my profits. So we believe that this strategy will work for almost any market, but why is Forex the best? Like I said, it never closes. It trades very well using technical analysis, and anyone can trade it with any amount of money. Do you have a credit card? Then you can trade the Forex market. I think that they're thinking about changing the rules around that right now, but it's my understanding that you can still deposit into a currency account, a Forex account, using a credit card. So it's very accessible for a trader of any skill level and any size capital account. Okay, so I want to make an offer for you guys really quickly here, but before I do, I'll tell you what I had to say about some of our other courses about the Ichimoku Cloud. Today, Andrew talked about a possible trade in Facebook based on reading the cloud. After waiting for the signal he was talking about, I entered the trade and exited a few minutes later for $400 profit. Thank you for all of your help with building my small trading account on a daily basis. And that's what these trading plans are all about, building accounts on a daily basis. I cannot thank you guys enough for following exactly what I learned in the How to Trade Weeklies using the Ichimoku Cloud course and the new trading plan webinar. I have made thousands in profits. I love the Ichimoku webinar you taught. I attended about 2 months ago and learned a lot more about something I had been studying on my own. I made a couple of grand with you in the last Facebook long trade. And I'm showing you this to you guys because to show you that we know the Ichimoku Cloud backwards and forwards. So with that, I do want to make an offer for you guys. We have a special topic course coming up, and it's going to be hosted by both Andrew Keene and myself. So both of us will be teaching this, and it's on Thursday, April 23rd at 8 p.m. Eastern Time, and it's called Learn the Best Pairs to Trade. I'm going to offer it to you guys today for 80% off our regular price. It's regularly $4.99, and we only have 50 spots left here. And what we're going to teach you is the in-depth look at this trading plan that we went over here, learning a trading plan with stop losses and targets, learning how to pick better levels using the Ichimoku Cloud, learn how to harness leverage in Forex and use it to your advantage, learning a systematic plan to remove emotion from your trading, and master a strategy that has produced 40% profits per year for the past 3 years. We're going to offer this today to you guys for $97. So Alan, you ask, what is the smallest cost to join and learn with us? Well, there it is. It's $97. It's not going to get any cheaper than that. I will put the link in here for you guys. Optionsonthefloor.com/fast. Like I said, the course will be probably about 2 to 2.5 hours long, and anyone that cannot attend on the 23rd at 8 o'clock, have no worries. We will send recordings out right after. Okay, a lot of people just end up buying the course just so they can get the recording after and go through at their own pace. But you'll have access to it for your entire life. You'll have access to it for life. Okay, and we're going to go over all of these different things. This is a really, really great trading plan. We've worked very hard to put this all together. And if you're someone that has struggled with any of these things, placing your stop losses, where you're going to put your stops at, where you're going to put your profit targets at. Maybe you take good trades, but it seems like you leave money on the table because you can't quite figure out that one part of it. Maybe you don't really know how to pick good levels of support and resistance. Well, we're going to show you how to do that in detail using the Ichimoku Cloud. Maybe you're a little bit afraid of leverage, or you're trading stock and you're not liking the returns that you're getting relative to the amount of money that you have to put up. Well, we're going to show you how the Forex market and the leverage that you get in that market can help you increase those profits while actually risking less money. And of course, learning the trading plan to help remove emotions from your trading, concrete lessons on where to place stops, where to place profit targets, so when after a trade is signaled, there are no more questions about where you're going to get out, where you're going to take profits, and where you're going to cut the trade for a loss, okay? A through Z. Pretty much a trading plan that can be applied to any type of trader trading any product, but with us, we're going to talk about it with the Forex market because we believe that this works the best in that market. So does anyone have any questions about what we just talked about or about the course that we're offering here? We've got about 5 minutes left to go here. Got about 5 minutes left to go. I tell you what, guys, I wish I didn't have to go. I've been talking this whole time, and every single time that I I've been looking at this with you guys this whole time. My P&L and my trading account has been creeping higher all day. I'm up $4,000 today, mostly because of options I traded earlier this morning, but love it. So how do the exits? Oh, so the exits are calculated by using the stop loss. So for example, I want my exits to be at 50%, 100%, 150%, and 200% of the distance between my entry and my stop. So if I'm using a 100 pip stop, my first target is going to be 50 pips higher, second target 100 pips higher, third target 150 pips higher, fourth target 200 pips higher. So does the content of this course apply to trading options? So we're going to focus on Forex here in this particular course. The course concepts can be applied to pretty much every product that's out there. We're going to do all of our examples using currencies because this particular strategy was tested in the currency market using historical data with the currency market. But you can take these ideas and apply them to pretty much anything. Can this work with Nadex, bull spreads, and binaries? Right, so you can use swing trades. You can use the swing trade signals to trade, in the Forex market to trade any product you want. So, like I said, we're doing this in Forex. So can I use it to trade? Can I use it to apply setups in currency futures? Yes. Any other currency derivatives? Yes. Is the 40% profit based on no leverage used? No. So there's, currencies trade with leverage, right? It's a market that doesn't work without leverage, right? If I'm trading without leverage, I'm never going to make any money. It's impossible, right? I need the leverage, or else I'll never be able to trade in size enough to actually produce profits, right? If I short the Euro USD and I want to do it, without any leverage, well, I can make a couple of pips. I might make a couple of pennies on a $500 risk trade, right? So the leverage is important, but in the course we're going to teach you how the leverage is actually your friend, and when using stop losses correctly and responsibly, like are going to show you in this course, the leverage is actually something that you're really going to want to have, right? It's going to be something that you're going to say, wow, this is powerful. This is how I am going to make money using this trading plan. So I think we probably have a couple of minutes left here. Any other questions, guys? Any other questions? Yes. So we go in depth on every single aspect of the Ichimoku Cloud here. Oops, sorry, I meant to send that to everyone else to read. We go in depth into every aspect of the Ichimoku Cloud. So yeah, the course covers all of that, and then how we're going to trade it. How we're going to trade it. So any other questions? I probably have time for like one or two more questions. Anything you guys want to know about this at all? Have I ever applied these strategies to Bitcoin? I actually haven't, and it's really unfortunate. I was supposed to go out to New York last week or the week before to talk on a panel at the Money Show at the Traders Expo about Bitcoin, and I was going to lay out this whole Ichimoku Cloud trading and Bitcoin thing, but I unfortunately had a conflict and wasn't able to attend at the last second. But this particular course is going to be about Forex. It's going to be how we use this in the Forex market. Okay, so probably one more question. I think I have about a minute left. Do you use No, yes, I always use 4 profit targets. So this 40% profits per year for the past 3 years that we're talking about here, those are the results we got after testing using the stop loss selection that we have and the 4 profit target system. All right, so I take off 25% of the position at each of those 4 targets, and after the second target is hit, I move the stop to break even to lock in those profits.